After 4 weeks, Bitcoin has broken down from the uptrending support line of the rising channel. This means Bitcoin is officially in a downtrend. How low can the downtrend take us? Can the bulls reclaim control? And what impact could CPI have on the markets? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be covering the short-term price action, the macro price action, and the relevant economic news. The upcoming CPI data is in about 12 hours, so we'll be discussing the impact this could have on the markets. We'll also be going over the current price action and the breakdown from this 4-week-long rising channel formation. What does this mean? Where can the price go? And of course, what should we be expecting next? Before we get into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic data. If you are interested in trading, you can join our trading channel. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive analysis. You'll also get access to our group chats with all of our members, our general chat, our trading chat and education chat, our trade setup chat, our news chat, our daily video and help chat. If you're interested in gaining access to all of that, go ahead and contact me in the pinned comment of the free channel to find out more information and our entire trading track record. Let's go ahead, guys, and dive into the video. So as we've said in the intro, Bitcoin has seen a little bit of a correction from the breakdown of this rising channel formation. And if you've been paying attention to the channel over the last couple of weeks, you would have known we've been expecting the fifth point and the breakdown for quite some time. We said we were in a rising channel formation. This is a bearish exhaustion structure. We have a 70+% probability of a breakdown if the fifth point is created on the low. We have 0.1, we have 0.2, we have 0.3, we had 0.4, we created 0.5, and we saw that breakdown actually complete. So the breakdown is in progress. Bitcoin is technically in a downtrend right now, and we'll be discussing what this means in the later part of today's video. Moving from here into the market data, let's go ahead and take a look. 24-hour liquidations are up 99%, sitting at a total of 62 million. Again, most of those actually coming from long positions, as Bitcoin loses that support, taps the downside liquidity, and pushes lower. Moving over to volume, up 31.95%, sitting at a total of 60 billion. Not too high, not too low overall. Moving from there to our volatility index on the 60-day period, we can see the volatility is still moving very much sideways, very much flat. And on the 30-day, we are starting to see a little bit of chop moving down ever so slightly. Again, the lower the volatility on the 30 and the compression on the 60 equate to overall compression, exhaustion, and we generally will see a large move whenever we get that breakout, whether it be a break above 28k, which is becoming increasingly unlikely, which we'll discuss in today's video, or the break below 25.2 to 24.4, we will see a surge in volatility either way. As we saw a surge over here, we're likely to see a surge above or a surge below. Again, an explosive move is loading on the charts, but has not quite triggered as of right now. Moving over to the DXY, the DXY is actually broken toward the downside of this channel. Again, a measured move analysis of this channel, taking the low point to the height, applying that to the breakdown. We expect a continuation lower towards the 50 EMA or towards the 104.5 range, provided CPI data does not push the DXY upwards. Remember, if CPI data comes out bearish, indicating inflation is back on the rise or is rising again month on month or higher than forecasted, we could actually see the DXY push upwards, irrespective of the fact that we have broken downwards. However, if inflation data comes out bullish, meaning it is falling again, we could see the DXY drop much lower and much quicker. So definitely pay attention to the inflation data. We do, of course, have that data coming out within about 12 hours. And as you can see over here, the core inflation year on year, inflation rate, and year on year inflation rate all kind of went up in the last period, right? We're looking for, again, higher than forecasts to be bearish, lower than forecasts to be bullish. Very straightforward stuff. If we take a look at the bigger picture for inflation, inflation data is very important in determining two things. Number one, how asset prices are going to perform, because if we have rising inflation, but we do not have rising interest rates, we generally see asset prices increase. However, if we have consecutively rising months of inflation, this could be potentially leading for a future rate hike. And if we see interest rates go up, that basically increases the systematic risk in the market, and that is what causes to asset prices to fall. So right now, last period, we did see inflation move up a little bit, okay? Interest rates are generally quite lagging to inflation. So we do see inflation come back down this month. We could actually end up seeing interest rates falling. However, if we do see inflation continue up month on month, it's very likely in a future period, we will see those interest rates climb back up, therefore increasing the systematic risk in the market and pushing asset prices down. So the question is, assets will do well provided inflation rises without the connotation attached that interest rates will rise as well. So if there's no connotation that interest rates are going to rise with inflation at a future date, assets will do relatively well. However, if inflation starts rising aggressively and there is a connotation that interest rates will start to rise again, we will see the market correct. So we are watching out for inflation data. Of course, if inflation comes out bullish, meaning it is falling, okay, that will be relatively good for assets. However, if it comes out bearish, meaning it's above forecast, is rising, we have two scenarios. Scenario number one, we don't have an implication of rising interest rates later. That will be bullish for assets. Number two, we do have an implication of rising interest later. That could potentially be bearish for assets. So pay attention moving forward. Moving into the stock market, again, the S&P 500 has seen a pretty decent bounce over here. We actually held the weekly close above this trend, which is fantastic. Again, this is a monthly long trend, so we do need a weekly close below for that confirmation of breakdown. We have broken above that bullish trigger point as discussed in a prior video, so we do expect a continuation upwards into this level of resistance. Again, CPI data is going to be pretty important in determining what happens over here as well. The same goes for the Dow Jones over here. We saw a perfect retest of our expected target perfectly at this 33,000 level. We have now seen a bounce again. We do need to push a little bit higher over here on the Dow Jones to push any higher. We are challenging a short-term resistance. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So, a lot has happened on the charts, guys. We're going to discuss this chart firstly. So, first and foremost, we have to identify two things. Our ranges. We've done this every single video and we're going to continue to do it until these ranges end. The most important levels you should be watching on the chart right now include the 31.3 to 32, the 28 to 28.4, this is probably the most important, and the 25.2 to 24.4. These are our ranges, our structural ranges. This is going to be a bullish trigger slash resistance, okay, high time frame resistance. This is going to be a bearish, okay, trigger slash high time frame support, and this is going to be a directional trigger within the range, meaning if we break above this level, we are very likely to see a continuation upwards to our high time frame resistance. And if we remain as resistance, as we have seen that breakdown, we're very likely to continue down towards that support. If we take a step further, we can see on the RSI, we have actually seen a negative momentum shift. We have seen the breakdown on the RSI. This, of course, is very, very bad. It indicates right now we do have negative momentum. We have a loss of 50. We've rejected and confirmed the rejection from 28K, and we are likely to continue the trend downwards until one or two things happen. Number one, we reached a high time frame support of 25.2K, or number two, we get a whole bunch of buying pressure in this mid-range support, which we'll discuss in today's video, and we push upwards from here. However, it is not looking fantastic for the bulls. If we do continue lower and retest 25.2, it is highly, highly unlikely we will be holding that point for a third time. This will be a lower high from these points over here, okay? We have 1, 2 retests. We're very likely to be dropping below, considering the fact that we have negative momentum, and moving over to the weekly chart, considering the fact that we would have had a rejection, okay? A rejection from the upper band of the Gaussian channel and the bull market support band. So we will be entering that level from a position of weakness this time around, which will very likely end up losing that base of support. If we do lose that base of support, the next target for Bitcoin is going to be these low points, 22K or even 20,000. So again, it is not looking amazing for the bulls over here, but we have to remember, support is support until it's not. And while we remain in this high time frame range, because that is exactly what we're in, right? If we zoom out a little bit again, we are essentially in this high time frame range. This is our range over here. We're essentially consolidating within this range. While we remain in this range, we remain in the range, and therefore we should not expect a breakdown until that support level is retested. So what I'm trying to say is, don't get overly bearish while the price moves up to support. If you were going to short, you should have done so over here. Don't go ask me, Whale, when's the next time to short Bitcoin? Blah, 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 blah. I've already given you my opinion. I've already given you the setups. We already took those positions at that point. Now is the time to reap what we sow and enjoy the profits. And then the next decision is really, when should we be taking profits and when should we rotate into longs, okay? So again, don't chase the market. When the best time to short is generally when the market looks the strongest, okay? Only after we see these massive surges and there's so much strength, all the indicators are saying we're going to the moon, is generally when the move upwards is pretty much done, right? Just as when we see these huge corrections down and everything's looking ridiculously bearish and everyone's saying we're going to freaking 2K, that is when it's time to long, okay? We have to be paying attention. Generally, when the move is obvious, most of the move has already completed, okay? Most of the move has already completed. So now we're starting to look obviously bearish, okay? We're correcting down. It's time to be scaling out, maybe taking some profits, adjusting those stop losses. We do still expect a correction lower, but we are being cautious and we're taking those profits while the market provides us as opportunity, as nothing is certain in trading. So moving back to this range, guys, if we lose that range low, expect a high time frame continuation downwards. If we break above the range high, expect a high time frame continuation upwards. Simple stuff, guys. Let's go ahead and move over to the weekly chart. So again, we're not looking relatively amazing here. We're really not. We're actually dropping back below that bull market support band. You can see the bull market support band on the weekly. We're sitting just above it. According to the short-term price action, the current price action of Bitcoin is sitting at around 26.8K. So if we go ahead and draw a horizontal line at 26.8, that brings us to this level. 26.8 is actually underneath the 50 EMA on the weekly, and it is underneath the bull market support band low, as well as the Gaussian channel high point of the resistance. So we are underneath all three bullish trigger points from a technical perspective on the weekly. This is suggesting we are in a downtrend. This is suggestive of weakness. Of course, we have 4 days remaining on this weekly candle, and if all these technical indicators are lost, or their structural and technical levels are lost on the weekly, that will indicate a very high probability that Bitcoin is going to be continuing down to 25.2K. So definitely keep a close eye on this. It is suggesting a lot of weakness. It is suggesting you should be paying attention. Again, I'll spin it back again. I'll say it again. I've said it 100 times. I'll say it one more time. You should not be relatively bullish on Bitcoin on the high time frame, okay? And I'm not talking about the macro, right? If you talk about the macro, we bought Bitcoin all the way down over here. We've sold firstly up over here, we shorted over here, we longed over here, and we shorted over here. We've been shorting the key levels of resistance, and we've been longing the key levels of support. It's really been that simple. A lot of people ask, wait, well, how have you done it so perfectly? Number one, identify the range. Number two, identify the trend, and simply follow the main rule, which is support until it's not, and resistance is resistance until it is not. All I have done, it's not rocket science. I have shorted the high time frame resistances over here, and I have longed the high time frame supports over here and over here. And of course, I've shorted that mid-range as I did expect a negative momentum shift to occur. Okay, not rocket science, guys. Pay attention to the charts, be objective, eliminate emotion. One of the main reasons I'm able to trade Bitcoin so efficiently and effectively, like a massive 79.6% win rate or something ridiculous, is because I don't hold any Bitcoin. I'm not a long-term investor. I have no bias to the direction of Bitcoin. A lot of people on Twitter, they hold a bunch of Bitcoin, then they try trade, they get wrecked. They have internal, intrinsic, and sometimes unconscious bias to where they want to see Bitcoin go, and that influences their opinions and decisions. I don't hold Bitcoin. I'm not an investor. I do not care what price Bitcoin is. That enables me to be fully unbiased in predicting and projecting and doing analysis of Bitcoin, as I genuinely and wholeheartedly could not care less what the price action does. All I care about is the percentage change between my entry and my exit. That is all I care about when it comes to trading. That is it, okay? So if you want to trade Bitcoin effectively, you really need to, number one, not hold any Bitcoin. Number two, detach yourself fully to what your long-term position on Bitcoin does. Don't care if it go up, don't care if it go down. Don't even pay attention to it. Ignore it, put it in a cold wallet, forget about it for 2 years, whatever you want to do with it. Pretend it doesn't exist. You have to be completely unbiased when it comes to trading to trade effectively. I lost my train of thought, but we'll go ahead and pick up from somewhere else. So moving back to that short-term chart now. What is Bitcoin doing really? What is it really doing? So first and foremost, when we take a look at this chart, we have to identify, number one, we have our structural range. Rising channel formation, perfect. We broke down, okay. Number two, we have resistance, perfect. We had weakness into resistance. Cool. We saw that breakdown. We saw the continuation lower, and we have seen the breakdown with the retest on this channel. So we have a valid resistance. We have a valid channel. Let's go ahead and identify the range of which the price action can move in. So we take a measured move analysis from the range low to the range high retest. We apply it to the breakdown point, and we can see that takes us to around about 24.75. So we know 25.2 is a major area of support. So we're going to go ahead and say that is going to be the target low of the breakdown of this channel, meaning that is not particularly the price of which we expect Bitcoin to go to, but provided Bitcoin doesn't create a new structure that could invalidate this measure move, okay, that is going to be the expected trajectory of price action going forward. Meaning, again, this is not where we expect Bitcoin to go. It could go, okay? But we expect it to go there provided Bitcoin doesn't create a new high time frame structure. Meaning, if Bitcoin breaks above this diagonal trend line, for example, that would invalidate this target and we would continue upwards. However, while we remain in this downtrend and such broken down from this rising channel formation, this measured move target is a viable area for Bitcoin to retest. And as we suggested already, if we retest that level, okay, according to the weekly charts, according to the daily chart, we're very unlikely to actually hold it for a third time as support. So Bitcoin is not looking fantastic. Furthermore, if we take a look at this chart over here, which is going to be this horizontal trend line, let's go ahead and delete this. We can see Bitcoin has actually reclaimed, okay, re-entered this high time frame horizontal channel formation. This is the horizontal channel formation we had for quite some time. We had it moving into, of course, this massive breakout over here, which resulted in a move up to 28K. This high time frame channel had deviations to the top side. We've actually re-entered that channel. Again, when we break into a channel, whether it be a massive move upwards and then a break back in, okay, like over here, or a break back in like over here, okay, we generally assume the price will continue to the lower part of the channel, provided that break down into the channel continues through. So right now we are in a downtrend, okay, from a technical perspective, from a structural perspective, from a high time frame and short-term perspective. We expect the price to continue downwards, provided we do not break above this downtrending diagonal resistance. If we break above this downtrending diagonal resistance, that will flip the current trend. The price is likely to continue upwards and through 28K. Now, Bitcoin could very well come up and retest this trend line again, maybe retest the confluence point between these points. But again, resistance is resistance until it is not. So while we remain underneath this trend line, and furthermore, while we remain under 28 to 28.4K, we are within this bearish territory of the channel. If we go ahead and zoom out to the channel once more, we can label these ranges, right? We can label the distance between 28.4 to 31 to 32 as a bullish range, and we can label 28.4 to 28K downwards to 25.2 to 24.4 as a bearish range, right? So while we remain under this level, we have a slight advantage for the correction, and while we remain above this level, we have a slight advantage for a continuation upwards. I'm going to leave the video there, guys. I hope you enjoyed. If you've got any questions, leave them down below. Now, I would also like to put this announcement out there. CPI data is today, okay? CPI is heavily correlated to the market's performance, and of course, it is generally quite manipulated. The data is generally manipulated. The price action is very sporadic. If you see crazy movements today, just ignore them, okay? Take it with a grain of salt. In fact, if you're trading, just avoid trading today altogether. It is much easier to just come back tomorrow after the charts have done their crazy shenanigans and get back into the market. So any move that occurs today, take it with a grain of salt. If you see a breakdown significantly or break up significantly, just be like, okay, we saw it happen, and then just wait till tomorrow, okay? Don't panic too much about the movements. We've seen crazy movements on CPI in the past. We could see that happen in the future. So take a step backwards. Let the charts do what the charts do. Let the market do what the market do. Let the people who jump in and get liquidated, and come back tomorrow fresh, ready to go with a clean chart. Thanks for watching, and I'll catch you guys in the next one. Actually, before I go, again, check out the Crypto Academy courses. It is a 10-unit course to teach you how to trade. If you want to learn how to analyze the charts like me, that is where we teach you. It's a foundation for new traders and new analysts. More importantly, for new analysts, okay? If you're brand new to technical analysis, that is going to be a good base point for you to start to build a foundation moving forward. Thanks for watching. See you guys in the next one. Cheers.